So I know you guys heard recently that Burry made some purchases, and there's 3 in this video I'm going to go through that I think have a really strong argument based on the technicals alone. Add that to whatever fundamental reasons why Burry's going long, just strengthens your argument. So let's go through them. So just looking at GEO on the weekly, you do have hidden bullish divergence on your MACD. You are breaking the supply line from this downsloping trend here that dates back from April 2017. You're also putting in a double bottom. One time, nobody knows. Second time, confirmation, potentially everybody knows. And you're doing this at an 886 from your previous swing low to all-time high. You've retraced, and this asset has sold off 88% of its value. And you're putting in a double bottom at this location. And to get your profit-taking levels, all you're going to do is measure from the top of your swing high to your bottom. First is your 382, your 50%, and your 618. This is going to be your profit-taking levels, and keep in mind this could take 3 to 6 months or even longer to play out. Something you buy, you set your stop below the supply line here and let it ride. You get stopped out, no problem, move on with your day. But the way this is setting up, there's potentially massive upside. Also taking a look at GEO on the daily, you do have this bullish shark at its pattern completion zone at another 886 from this previous swing low to high. 886 retracement, and you're having a beautiful reaction. Potentially you could catch this for another back test if you're lucky enough. You just also got through earnings. You could come back and even test the 200 simple moving average or run up to the top of the range here. So something to keep an eye on to find your entry point. But right now you've kind of missed the boat. I'd wait for a pullback to the 200, or if you're going to be continuing to have this bullish momentum, you wait for a breakout above $10, see if you hold this, and then you're on to the next level. But right now, as it stands, your target's $10. Alright, so the next Burry stock I have for you is CXW. I have it pulled up here on the weekly time frame. You can see what you've done, right? You have hidden bullish divergence on your MACD, you have hidden bullish divergence on your RSI. You've held this level of inflection that dates back from March 2009. You've actually globally sold off and hit the 886, a perceived value area where traders had limit buys. You have the bids come in, and what have you done? You've actually sprung back above this level of inflection. You've back tested it, held it, and rallied again. So even if you're looking to get into this trade now, you would just set up your stop loss marginally below your March 2009 lows, because anything below that, your argument becomes invalid. So I'll show you how you get your target 1, target 2, and target 3. When you're looking for profit-taking levels, you're going to take your discernible swing high to your discernible swing low, and you're going to measure out your 382, the common retrace area, your 50%, another common retrace area, and your 618 is your golden retrace area. So this would be your 3 profit-taking levels, and again, this is the weekly time frame. Each candle represents a week of price action. This could take 3 to 6 months. Definitely a position trade, not a swing trade. You're going to buy this, you're going to hold this, and what do? We buy low, we sell high. Okay, so this is something I definitely wanted to bring to your attention because it's very interesting. Burry owns it, and whatever fundamental reason he has, just another strengthening of your argument based on the technicals. Alright, and the last Burry stock that I have for you is QRTEA. This is on the weekly time frame, so another one that's an investment, a position trade where you're going to hold this for 3 to 6 months or even longer. But just looking at it from a holistic view, zoomed out at the macro, you have a low from 2008, a low from 2009, a low from March 2020, and November 2022. You have hidden bullish divergence on your RSI, bullish divergence on your MACD, and you're definitely at a value perceived area because in between this range is straight down, straight up, straight down, straight up, straight down. Why not straight up again? So you're currently at 233 on price, and you're looking at a potential massive upside to 1218. Historically, that's all you've done in between this range. Keep in mind, it's the weekly time frame. It's not something you're looking to take profits on anytime soon at all. This one also is a great strategic area for you to manage risk, where you would have a stop marginally below your level of inflection of $1.79, depending on your risk tolerance, or even 99 cents. Anything below these levels just makes your argument invalid. So definitely something one could buy low, sell high. This is something I'm actually actively invested in currently. I did purchase shares, and I'm gonna let it ride, and we'll see how it goes. So those are the three most bullish looking assets that Burry's recently picked up. I just wanted to show you the profit taking levels, how you'd measure them up, and just the technical reasons on why somebody would be going long. Definitely in a couple of these, not financial advice, but this is definitely where one could buy low, wait a while, and sell high. So until next time, thank you so much.